The month of February is off for a terrible start for 2026. Historically, February is one of the worst performing months out of the year. And on February 4th, we definitely saw a downturn in the market, which we will discuss today. Bitcoin is currently hovering around 71,000. And we do have some positive news today. Alphabet crushed their earnings, and their CapEx has folks thinking Alphabet is spending like a drunken sailor. Welcome to another episode of All in Society. Before we dive in, please go over the disclaimer. Anything you hear in this episode is educational and entertainment purposes only. Always speak to a professional before you put any money in the market. And let's get to it, y'all. So I want to start like this. This video is hard to make because I got absolutely crushed today. Absolutely crushed. Long-term investment account got hit today, and my options account got murdered today. Absolutely murdered. I exited out of quite a few positions. I don't remember exiting out of that many positions at once in a long time. I know last year I kind of sat through it and let the market bounce back once tariffs were put in place by Trump in April. And I sat through it and waited for it to rebound, and it rebounded magnificently. But this is completely different. This is a valuation reset, what I'm calling it. It looks like if you did not absolutely, and I mean absolutely, crush your earnings and raise guidance substantially, and if your valuation, if your PE ratio was expensive like a Palantir, your stock got hit and got hit hard today. Even the high flying memory stocks like your SanDisk, those companies even got hit today. So February is definitely here. It's going to be a volatile month. It's going to be a volatile year. After what happened today, I'm tempering expectations for 2026. We had a really nice past couple years. I think it's going to be, I don't see how we're going to have a 20% return in the S&P 500 or the NASDAQ this year at all. Maybe 10%. I think this is going to be one of those average years. You get like your 8 or 7% return this year. Now there's going to be winners. Don't get me wrong. I'm not just, oh, this is a bear market or anything like that. In the grand scheme of things, the market didn't, completely just lose its pants and just fall substantially. But I don't know. We'll see. February is going to be a short but long month. But let's start the episode with some positive news. And let's start with Alphabet's earnings call today and their report. And this is for Q4 for 2025. So Alphabet reported a monumental quarter on paper, but the stock's reaction was a quote whipsaw from Google Gemini of fear and greed. Before I dive in any further, my Gemini has been hallucinating like crazy. Like today, I asked for it to give me a recap like it does every day. And within this, it told me that Palantir was up 11%. We'll talk about Palantir, but that is far from the truth today. So if you're someone who's using Gemini, let me know if you guys think, has it been hallucinating for you more so recently with your research? If you're someone who does research on the stock market or whatever the case may be, let me know if you're experiencing these major hallucinations like I am recently. I'm not sure if I'm asking it to do too much at once, at one time, or what. But yeah, back to Google, back to Alphabet. So initially dropping 8% after the earnings numbers were released, it recovered pretty quickly. It was probably because one of those algorithms picked up the capex that Alphabet had, and we'll talk about that just 1 second. But it bounced back. The story of the night was a staggering cost of staying at the top of the AI food chain, and we will discuss that. So the financial triple beat. Total revenue for Alphabet came to 113.8 billion, which is up 18% year over year, which crushed estimates. Earnings per share was $2.82 versus $2.62 expected. And Google Cloud, $17.7 billion plus 48% year over year. That's awesome. That was the star of the show. Cloud operating margins reached 31.6%, proving that Google was successfully turning AI infrastructure into a high margin cash cow. Now, Amazon does report tomorrow after the bell. And seeing these numbers from Google's cloud, I'm very optimistic that Amazon should post some pretty strong numbers for their for AWS as well. So time will tell. We will see. The CapEx shock, and this is what really shocked analysts and investors alike. The market was stunned by Google's 2026 capital expenditure, the CapEx, guidance of 175 billion to 185 billion. To put that in the perspective, that is more than the entire market cap of most S&P 500 companies. Crazy. The CFO characterized this as a, quote, aggressive but necessary bet to build the next generation of AGI infrastructure. Key takeaways from the earnings call. Genie AI integration, we've been talking about that. CEO Sundar Pichai confirmed that Genie 3, the world model, is being integrated into the YouTube Creator Suite, allowing creators to generate, quote, explorable environments for fans. Apple's partnership management hinted at a multi-year extension to their search agreement, which now includes Gemini as a core backend for Siri Intelligence or Apple Intelligence in the upcoming iOS 20. And search resilience. Despite fears of AI search competition from Perplexity and OpenAI, Google search revenue grew 17% to 63.1 billion. And I will be honest, I had shares. This is around April, once the market was tanking last year. I had both Google and Meta. And I consolidated because Google was going through a lot. They had that court battle, and everyone was saying that OpenAI was going to take their lunch in search, and Google Gemini was kind of eating into their own business. And I got rid of all of my Google. Now, granted, it wasn't a ton. It wasn't like a major holding at the time, but still, it would have been nice to still hold into that. Now, I've made some money on some options as it's been fluctuating the past 6 months or so, but it would be nice to still have those Google shares that I got shook out of during that down period last year. But I think it was good. You have to consolidate and bet on my highest conviction picks. And back then, Meta was doing really strong, and so I bet on Meta as my leader in the communication sector. And unfortunately, you win some, you lose some. All right, so let's go over the market recap. The NASDAQ suffered a negative 1.5% drop today, making it its worst session of the year as, quote, valuation reality check hit the AI sector like we discussed. It looks like now investors are caring about the valuation of companies all of a sudden now. The Palantir plunge. Palantir closed down over 11% despite reporting 70% revenue growth yesterday. Shares crashed to $139.54. The drop was triggered by a widely circulated hedge fund letter highlighting its 400 times PE ratio, arguing that even, quote, perfect execution couldn't justify current premium in a high interest rate wash environment. Now, this is very ironic because I've been looking at this and just looking at the valuation of Palantir, and it's been like this for the past 6 months to a year. So why of a sudden now are we looking at this and saying, oh yeah, now we have to sell it, even though they had a nice quarter? Doesn't make a whole lot of sense to me, but it is what it is. I'm not a Palantir investor. I think I made a few bucks off of it trading options when it was around 160 and ran up to about 180 or so. But it was just kind of weird all of a sudden now that we're conscious of the valuations. Um, to be also, but be honest, I think it's actually really healthy. Now we are some of the companies that were high flyers and they really weren't sound, uh, fundamentally sound companies. Those companies are starting to fall, and now the cream should rise to the crop. So now maybe a company like Nvidia, who has a reasonable valuation, and its numbers and margins are very strong, and I believe they should continue to be that way. Maybe now, because they had last quarter, they had a really awesome quarter, but the stock didn't do anything, hasn't done anything, continues to consolidate or move lower. Maybe now, if they report at the end of this month and they have another blowout quarter, maybe like something to the likes of what Alphabet did today, maybe we see shares move back above $200 or at least approach that $200 level again. Now, I did take part of this, unfortunately. AMD's brutal day. Shares were down 15%. So AMD, or Advanced Micro Devices, led the semiconductor collapse. Although they beat earnings, their Q1 guidance of $9.8 billion, which was a sequential decline from Q4, signaled that the, quote, infinite growth phase of the AI chip cycle might be normalizing. Number three, the safety rotation. So now, as money left the tech sector, it poured into value and healthcare. Eli Lilly was up 10%, Amgen was up 8%, and saw massive inflows as investors looked for, quote, non-AI growth. I really don't think this is going to stay here for long. To be quite honest with you, I think the money is going to fly back into that magnificent seven again, as long as they had strong earnings. I really don't see Apple really taking off and going too much higher because people are conscious of the valuation. Its valuation is pretty high. Google's valuation is pretty high. But a company like Amazon, like I said earlier at the top of this episode, if their AWS crushes like Alphabet's did, their valuation is pretty cheap compared to where it's been in past year or so, or even further than that. So we might see a huge blowout if Amazon, they're not spending like crazy on CapEx and their AWS does well as much as the other part of their business. Maybe they give a little bit more insight of how AI is impacting their business going forward. And if they have a beat on the top and bottom line and they guide well, this could be an absolute monster quarter for AWS and Amazon. I think everything is kind of painting a picture for Amazon to have a really nice bounce if numbers come back strong. So we'll see. Warsh and the dollar. The US dollar index, or the DXY, hit a new high for 2026. Markets are pricing in a very aggressive Fed under Kevin Warsh, which is making high multiple tech stocks like Palantir and Nvidia much less attractive. And 5, Genie's shadow on gaming. Stocks like Unity, Roblox, and even Take-Two, which we've discussed recently, continue to bleed out as investors digest the release of Google's Genie AI. Now, we've already spoke about that already in the past episodes. Definitely check out those last episodes. That last episode regarding Genie and their project, it's been doing pretty good. So I appreciate you guys for liking it, for watching it. Really do appreciate your support. If you liked anything that you've heard so far in this episode, please like, please subscribe, and share this video. All right, we'll just take a gander at the market because I don't want to continue to make myself go to sleep and cry myself to sleep. Just looking at the scoreboards, which are the major indexes. The S&P 500 was down 0.5% today. In the grand scheme of things, not that bad. It really fought back from its low today of 6,838, but it closed at 68.82 and 72 cents. The Nasdaq down $1.50. It bounced off of that low today as well and closed at 22,904, down negative 1.5%. And gold was pretty much flat today. It looks like it's trying to fight back, maybe, possibly, in after hours. This isn't updated, so I'm not sure where it's at. I think last time before I looked at it on Robinhood, it looks like the Asian market was down significantly. So probably, I'd imagine gold is probably down right now as well. Pretty much right across the board. I'd highlight some companies that bounced today. DraftKings bounced off its 52-week low today. Yeah, they hit a 52-week low. Still a believer in that. Apple, they're not doing a whole lot of spending, and they're not like the other Magnificent Seven, so their shares were up to just over 2.5% today. Netflix bounced a little bit, pretty much flat, and that's essentially pretty much it for the day. Everything else pretty much deep in the red. We were talking about company like SanDisk or MU. MU was down just under 10% for the day. And I'd have to search it. SanDisk, SNDK. Doesn't want to come up. Shares were down 15%, almost just under 16% today. So extreme sell-off. But it looks like it bounced in after hours. I'm not sure if it's still up. So yeah, it was a treacherous day in the market today. But if you're in the market, you're an investor, keep your head up. It's just one day. Looks like hopefully we don't continue this steady decline going south. February is historically a down month, so just kind of temper your expectations. Stay in the fight. Long-term investing, maybe sit on the side a little bit and just wait for things to kind of settle before you start to jump back in. And I'm going to tell myself that as well. All right, guys, keep your head up. We'll see you in the next episode.